How to choose the best freight factoring companies for brokers in 2024. Freight factoring has become an increasingly popular financial solution for freight brokers looking to improve cash flow, reduce risks, and scale their business in the competitive logistics industry. Call 888-653-0124 today or click the link in the description to learn more and share your success story. What is freight factoring and how can it benefit freight brokers? Freight factoring allows freight brokers to sell and assign their accounts receivable invoices to a factoring company to receive immediate payment, instead of having to wait 30 days or longer for customers to pay invoices. The key benefits of freight factoring for brokers include: accelerated cash flow, get paid within 24 hours instead of waiting weeks or months. This improves liquidity and provides working capital to cover payroll, fuel, and other operating expenses. Risk mitigation, transfer credit risk to the factoring company. Opt for non-recourse factoring to eliminate the risk and responsibility of invoice collections. Improved credit terms, increase days payable outstanding and negotiate better rates from carriers by leveraging instant payments. Growth opportunities, onboard new shippers, carriers, and take on more volume with the cash flow cushion and credit protection of freight factoring. Cost savings, reduce expenses related to financing, credit checks, collections, invoicing, and more. According to the International Factoring Association, IFA, factoring clients experience a 45% increase in sales and 39% reduction in costs on average. Key criteria for comparing and selecting freight factoring companies. When researching freight factoring companies, brokers should compare the following key criteria. 1. Industry experience and specialization. Look for freight factoring companies with extensive experience serving freight brokers specifically. They will understand the unique business model, challenges, and pain points. Industry veterans like Interstate Capital and RTS Financial have been providing factoring services to freight brokers for over 25 years. 2. Factoring rates, fees, and terms. Factoring fee typically 1.5% to 3% of the invoice value. Compare rates between companies. Additional fees, check for transaction, termination, underwriting fees. Advance rate percentage, advance per invoice, usually 90% to 98%. Contract length and terms, compare contract lengths, 6 months to 3 years, termination clauses, exclusivity clauses. 3. Funding speed and flexibility. Funding turnaround time from a few hours to 3 days. Faster is better. Credit limit, ensure it meets your monthly invoicing needs. Ability to adjust limit, look for flexibility in changing credit limits to match growth. 4. Factoring model and services offered. Recourse vs non-recourse. Non-recourse transfers collection risks. Spot factoring, factoring done selectively on a few invoices. Bulk, blanket factoring, selling a monthly batch of invoices. Integrations and features, TMS plugins, accounting software, etc. Back office services, credit checks, collections, invoicing, reporting. 5. Customer service and reviews. 24/7 availability around the clock, phone, email, and chat support. Online portal, anytime access to view accounts and submit invoices. Ratings and reviews, verify third-party review sites like Trustpilot. Broker testimonials, contact current clients for direct feedback. Tips to maximize the value of freight factoring. Follow these tips to optimize freight factoring and enhance your brokerage. Analyze invoices to determine the optimal factoring frequency: weekly, bi-weekly, or monthly. Match it to your invoice volume. For fuel savings, use a factoring company that offers discounted fuel cards tied to advance payments. Select a factoring partner that integrates with your transportation management system, TMS, to streamline invoice processing. If your customers pay invoices early, negotiate a remittance clause in the factoring agreement to reduce fees. For high-risk loads, use non-recourse factoring to eliminate risks of non-payment. For new shippers, use factoring to extend better credit terms and win their business. Leverage improved cash flow to upgrade equipment, hire talent, and implement growth plans. Case study: how BrokerXYZ used freight factoring to increase cash flow by $372,000 per year. BrokerXYZ was struggling with cash flow due to customers taking 60-90 days to pay invoices. They partnered with Interstate Capital for freight factoring. By factoring 1.5 M of invoices monthly, they generated $372,000 additional cash flow per year. This enabled them to upgrade their TMS, hire additional staff, and increase shipping volumes by 35%. In 2 years, their annual revenue grew from 7.2 M to 12 M. Conclusion: key takeaways. Freight factoring provides brokers faster cash flow, risk mitigation, and growth capital. Compare freight factoring companies based on rates, funding speed, services, reviews, and broker fit. Optimize factoring to maximize cash flow, savings, growth opportunities, and business performance. Next steps. Get a free freight factoring consultation and quote to access fast funding for your brokerage business today. Call 888-653-0124 today or click the link in the description to learn more and share your success story.